It's Thursday. Welcome, everybody, to the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to join us this morning as we do what we do each and every day, try to kick off the market, kick off the day by looking at the market from a technical and educational perspective, trying to identify turning points and potential breakouts on this, as people like to call it, Friday Eve, as it's Friday Eve. So let's go ahead and dive right in. Go ahead and getting started right away. Just a real quick commentary on yesterday. So the last 2 days, one of the things that I've talked about is discretion is the better part of valor, and I need a good reason to get in. And I will tell you, I couldn't find a compelling reason yesterday to get in on some of these things. Matter of fact, some of the positions that I did try to get in on got stopped out, and that's okay. You're going to have days like that. I'd rather miss gigantic runs than hold on for gigantic losses. That's something to always keep in mind. So looking at yesterday, now we were able to put in a new swing high in the hourly chart. Let's move to the 4-hour though and look at what the bigger picture is telling us. The bigger picture also put in a higher high. We did not yet put in a higher low, but we did put in a higher high. So, we're starting to see a little bit more stability in the 4-hour chart, kind of raising back up a little bit. The thing that is somewhat encouraging for longer term side is that these big, long, lower wicks tell me that the sellers were having a hard time holding on to their gains. Now, we did have a 15-minute level set up for a potential reversal. Remember on these that we need price to come in before it breaks back out. We never really got a good exit out of there, so you may or may not have gotten in on that thing. It was unable to bounce out of there, and then it just kind of continued up throughout the rest of the day as it moved from there. I will tell you, today I'm a little bit more hesitant to jump in on a reversal point. I still don't have any quality turning points until way up yonder, if you will, but I do have what could work out to be a decent little breakout to the downside. So if we reverse course and drop below here, then that could be a good opportunity to get short, I think, for a little move. It won't be a huge move. I don't think we're going to get another one of these gigantic splash moves where it moves 30 points in an hour, but I think you could get a little pullback, especially down into this region right here. So this is the region yesterday where we kind of really started to make our move yesterday afternoon. So look for this as a potential pullback in here. Basically we just went back to where we finished up on Friday. I mean, that's really what happened is and now we're a bit higher than that, putting in a little bit of a double bottom pattern, if you will. So I think a potential breakdown below this area here, still got a very small time frame reversal up in this range and a level up above us. No reason to change those. In the Nasdaq, we didn't have a trade set up in the Nasdaq, and that's was very much by design, because once again, I need a reason to get in, and there was not a compelling enough reason for me to jump in on anything in there. The Nasdaq as well, you could take the same short on the breakdown below this area here, but I have it in the S&P. You can mirror that in the Nasdaq if you so choose. Looking at crude oil now, crude oil. Another one that I thought we would get a little reversal off this area here. I was looking here for a potential move. Got a little breakout up out of this region, unable to hold on to it, and so now it's kind of rolling over and just hovering in this area as well. So not a lot of great movements yesterday based on those areas that we had identified. Gold is right now sitting in our area as we have finally come down into this region here where we think we can get a small reversal. So let's see if we get a little bit of a bounce out of here. So gold, I think if it does come out, your first target's going to be right up here at 1334. So a fairly short profit target on gold, as it would have to come out of this area in this region. So moving forward, we still have the breakdown to the downside in gold here. I think that's very possible we could get a little bit of a rally up and then come down and then break out down, move from this region right in here in gold. Let's see, moving to bonds. So bonds have come down into our area. Now, I will say this. I do not like this arrival at all. As Dr. Seuss would say, I do not like it. So you say, try it, and you may get stopped out. That I say. The reason is, can you tell I have a 3-year-old and I read Dr. Seuss? I don't love it when we stop and we base base before a zone. So if you're in this thing, you still have this trade hasn't been stopped out. You can still get a little bit of a move out of here. I am not a big fan of the area as of now, once again, because of the basing just before the zone. This is actually the setup for a good breakout the other direction. So let's see if we get a little bit of a reversal off of here. The euro, I keep turning on I'm not using my mouse today, I'm using the trackpad, and I keep turning on my lines. The euro here, we did not quite make it into the level, and so I said, well, let's change it to a dashed line, and we did. And we almost got filled, and it came back up again. The more and more that we come close to it and don't get in, the less and less I like it. I'm still going to leave this in play because it is still in play, but just be cautious of this level. The Canadian hit our level, and it's starting to move down out of this zone. So the Canadian is moving our way. This is a good opportunity right about this region here. If we get down just a little further, the 78.26 area is a potential place for moving stops and taking first profits as it's moving down. But we had, once again, that fair price value area just before the entry into the zone. Looking last and certainly not least at our Great British Pound, Japanese Yen. Great British Pound, we had a breakout above this area and unable to get there. So we are still waiting. If there's a breakout, it'll happen above that region. Not gotten there yet. And, this is a good, interesting case of why I didn't place the breakout a bit lower down here is because I had to get through this pivot right up in here. And this area has held. This has been a very strong fair price value area. It keeps holding, and we'll see once it does finally break if there's room for it to continue to run higher. Inside of the Japanese yen, I kind of feel silly for not drawing the line of a break down below this region here as we had that base right in that area. We came through it and boom, continued to drive it down. I'm actually going to put another level just above here because I think that we had a decent little reversal right in here that could act as another opportunity to get in if price does indeed come back into there. Now it's in the middle of the move down, so because it's in the middle of that, call it the middle of the hill, right? So you're always going to move faster if you get back to the top of the hill, but this is in the middle of the hill. Now, if I come back to the middle of the hill and turn around, it's still going to go down, but it's not going to go down with the same force and speed. So I'm going to change this to a dashed line because I'm in the middle of the hill. You're always going to do better at the top of the hill, but we're going to the middle of the hill, and so we're going to reverse right in there. So that is what I'm looking at for today. I think that the market overall, just real quick, let me throw... I'm not a humongous volume guy, but I want to throw volume on here for just a minute and just talk through it. So let me throw my volume. Now, volume tells me a fair amount. And what volume tells me more than anything is what's happening on our moves down versus our moves up. And I do notice that on my move down, I do still have higher volume, right? Slightly higher volume on my moves down than I do on the moves up. If I look at this, let's look at this let's leave out the overnight hours for the future. So what's great is I can turn the overnight hours off and just look at plain movements. So what I can see is that as we come down, our volume goes up, and as we go down up, our volume comes down. This is kind of still a bearish volume signature. So we're still putting in that bearish volume signature that says, okay, hey, just be cautious and be aware. And what I do notice also is that we have these spikes, these spikes that always come in near at the very end of the day, these really high volume spikes that come in here at the end of the day, as which we don't have that kind of volume a few weeks ago, right? Obviously now this is after the rollover, but you don't have those same end of the day volume spikes that you've had a few weeks ago. And that's an interesting telling fact. And I think a lot of this is just hedging on the offload side, right? The other thing to consider, on the day where the S&P 500 yesterday rallied, if I move this to a daily chart, on a day the S&P 500 rallied, we would anticipate a pretty strong sink in the VIX, I didn't see that big move down in the VIX. We had a little bit of a move down in the VIX, but not that big move down I would have expected. So, I was talking to a friend of mine, Eric, about that, and we had a move down, but not to the same effect that we would expect. So there's still a fair amount of volatility in the market, and this volatility is going to stay high. It's going to stay high until we start to settle in. And when you have these 300-point up days and 700-point down days and 500-point up days, you're going to have a higher volatility, which is going to need to be factored in and paid attention to. So, all right, everybody. If you've got any questions, please feel free to reach out. Chuck at iiefinancial.com. Until tomorrow, I will see you.